So in this video, we'll be talking about the last trade I took, the euro against the US dollar. It stands, the profits, the loss, and what is currently going on. Stick long enough and you will understand that there are more things to do in the markets than just buys and sells. If you're new to this channel, you're watching for the first time, do well to hit the subscribe button. We do share a lot of trading knowledge here. I learn, I teach, and we move to a better place. I'm looking forward to opening a Discord channel or a Telegram channel, and I don't know which one to take. So it now lies on you guys to tell me below which you guys find much more valuable, Discord or Telegram. But without further ado, let's head into the charts and see what we did last time. Okay, so this is the US against the euro, and I got stopped out of this trade with a 3,000 naira profit. Yes, it's very small money, but a profit is a profit, a win is a win, and you should learn to look at the market in that manner. Whenever you make wins, take it as a win. No matter how small, no matter how big, it is a win. And whenever you make losses, it is a loss. And you also learn to move from your losses as well as your win. Now, moving on immediately from this win, first and foremost, what happened? What led to this win in the first place? It is a win even though it was a stop loss. We all know market structure. I'm going to assume in this case that if you are new here, you may not have known market structure well enough. So I'll have this video tied up with a section somewhere around here where you can go watch the video on how to draw market structure manually. Also, there's an automated video, but I'll introduce that more later in the video. So looking at the structure of this market, if you're looking at the euro against the US dollar, we had a clear break of structure on the higher time frame. I'll assume if you are looking at this video and you're watching it and seeing so much lines on my chart and wondering how it's there, well, it's obvious you do not understand market structure. But drawing the market structure clearly here, we have the first break to the low, the second break to the low, that is the first break of low, second break of lower low. So we're not having a good higher lows and lower lows and lower highs, lower low, lower high. So once we've had this occur twice, we are now looking at a reason for a bearish market. Looking at the bearish market, we have this situation right here. So I'm going to start with the daily time frame. On the uptrend, we have first move to the upside up here, and now we started seeing moves to the downside. On the 4 hours, we have this demand zone right here, and then we have this demand zone on the 4 hours, while this is a daily demand zone. So we're trading for price to come into the daily demand zone. And if you look at the 2 hours, we also have another demand zone right here and another demand zone right here. So I already have a confluence here, and I just need a confluence here, and right here we have a confluence. So my first target was for price to make its way all the way down here first, and that would have been a 3.75 risk to reward ratio. By the version of 3.75, what we're saying is if you have $100 trade and you're risking $100, right? Looking to make 3.75 is you looking to make out of that trade $375. That is what 3.75 risk to reward ratio actually means. In this case, I was risking 3,500. Let's just run a quick calculation. So 3,500 multiplied by 3.75, I was looking at the profit of 13,125 naira in this short period of time. Not really short though, but in this period of time for price to give me profit. But however, that was supposed to be my first target, and then I had a second target which would have been 7 risk to reward ratio, roughly 7 down here. So looking at this trade, I was looking to maximize 3.5 to a high amount of money. Well, however, I got wicked out in profit. In how much profit? Well, like I said, I got wicked out for 3,817 naira 25 kobo profit. Where did I get wicked out, if you're asking this question? Well, it is simple. First and foremost, I saw this first structure right here, which I took, and price came in and made a move to the downside, creating a clear market structure, demand zone, supply zone for me right here. So I moved my stop loss just here. Now at this point, I'm at break even, not in profits, break even. And then price moved forward and then created this second demand zone. This second supply zone right here. With this second supply zone, I decided to move my stop loss all the way to this high. And with my stop loss at this high now, I would have waited for price to have moved differently. So one lesson I learned: whenever price makes a new high or low, you should not move your stop loss right there immediately. You should wait for it to create a proper supply or demand zone. I think this lesson is going to be very valuable to not just myself, but so many other traders out there. So what do I mean? Let's see what I mean on the chart. So what I simply mean is this: just like I waited for this first one, I would have waited for a complete of 2 candles after that. That is, I would have waited for these to have happened, which is normal. Let me show you the candles right here. So this particular candle, which is normal, and then I would have also waited for this long candle to occur, and finally maybe a third candle after that. So seeing this clear imbalance right here is what makes that zone credible enough for you to place your stop loss above it. So I would have waited for price to have printed that bearish move here first before I moved my stop loss somewhere around here. That would have been safer. But nevertheless, we can still do what? Observe the market. The market just wicked above a supply zone, and it is still within the premium area. So what I'm waiting for is, if price makes a clear push downwards, which is what this is signifying right here. So if price makes a clear move downward from this area or from any area around here, and then comes but doesn't cross the 50% retracement, it doesn't cross it, it moves somewhere, even if it's this close, and it comes back for a retest, I will go into the 15 minutes and go search for proper market structure again. So I'm going to be looking for the exact same thing: price moving like this on the 15 minutes. So price doing this same structure again on the 15 minutes, and then I will take that trade with my aim being at least this region for a start. So this is all I see from the euro against the US dollar. I hope you learned something new in this video. And if you also want to learn something even better, I have a video where I teach you how to use an automated method to see market structure without having to go through stress. I'll have the video pinned right here, just like the one I have on my charts, which you saw just now. You'd see it, you understand it, and see exactly how to use it. Also, in case you prefer the manual method, I also have another video right here that's going to teach you the manual method. I would like to see you in either of this video, but before you go there, do well to hit the subscribe button, click on the like button, and also share this video with someone who you think might find the education very valuable. And see you all tomorrow when I make the video for the pre-market analysis for next week, which I would have up here. Until then, peace. Catch you all on the next video.